take the bull by the horns.
From the floor of the CME Group, this is Danny Riley on this Wednesday, September 8th. And you know what? This is what it's all about. It's when people agree to disagree. And yesterday, I stepped out and said that we thought that the markets were going to go a lot higher. Now, we got a lot of rebuttal on the stuff coming off the internet from responses about that, and we're going to kind of tie that in a little bit. But first, we're going to talk about what's going on over in the S&Ps right now. I'm going to tell you there's nothing going on over there. The markets opened steady to a little higher, and they rallied. Pre-market volumes were light. We're into the rollover. That means the S&P spreads are rolling and the index spreads are rolling. And right now, if you look at the big contract, we've got 10,000 big S&Ps traded in the pit, but 6,000 of that came from the S&P spread. There's very little volume here. Now we're going to let Tim move into this, and we're going to go back and forth a little bit.
Hi, everybody. Tim Efke from Top Notch Trading. I took a look at yesterday's video that Danny made, and I want to correct him on a couple things. If he's going to pay attention to what the market's going to be doing, pay attention. The S&P did not open at 95 yesterday. They opened up at 98.30 to 98.5.
Okay,
that's the first mistake right away. So if you're going to say something, know where the levels are, because that's what I do. Anyhow, he's giving me a hard time about saying I called for a huge break, and I'll say that. I did. I was looking for New Year lows. But Top Notch Trading did come out and said 34 to 37 was going to be a huge support area. And if you look, the last week of August, we made 3 bottoms there. I can't fight that idea. Now we extended all the way back. Half the year right now is at 11.07 even, and I come in on the Globex holiday weekend trade and see an 07 quarter high in the S&P. Well, granted, we never saw it came close to that yesterday, so psychologically we're going to go test that level. But if you look at about 4, 5, 6 weeks ago when I did call for New Year lows, the key upside level that Top Notch was looking for is 11.1120, and that is the key to success. And if they can get back above that level, followed by 11.26 half, then I gotta concur with this guy. However, I'm taking that other side, and if they don't see it, and I can now see a trade above that or below that key level of 42.80, that's where the rebound started, and that's what Danny mentioned, and we saw it, and here comes the rally. Until then, we'll see, but I want to see what Danny has to say now about this.
All right. And I'm going to be more than happy to talk about this. Over the last couple of weeks after the market sold off and then started going back up, it did nothing but make higher lows. And with that in mind, you know, if you're a bear and you're looking at this stuff and you're saying, well, you know, we think the market's going to go down, those chart patterns don't look so bearish to us. Now, we're not saying that the market can't come off in September or October at some point. Historically, it has, and it always does. Or for those guys out there that are selling, they're just waiting for this to happen, okay? What we're saying is that there's a lot of lows that are made around this time of the year, and that what we think is that the current price action that we're seeing is indicative of higher prices, not lower prices. Now, we've got a lot of buy stops where Tim started talking about. We started hitting it up on the IM this morning that the buy stops really started above 97, but the bigger ones got above 1099 to 1102, 1103. We didn't quite get up there. The 10 handle rule came into effect, and now the S&P is coming off a little bit. But you know what? One of the things that's going to be really hard to figure this out right now is that we are in the middle of the rollover, and that a lot of the traders that are rolling, they're not really looking to put on positions or rolling positions. So with that in mind, we think that, you know, a couple more days of backing and filling at the 1100 level, we're going to go back above that 1020, 1127, 1128 level that Topstep, Mr. Topstep put out before we went off and sold off down to that triple bottom that Tim was talking about. We had that level. We put it out on the equity report for weeks before it got up there, and it came off. I think the high was what, 11, 20, and 27.75
on the mini Globex.
Right. So here, in the end, how we want to finalize this is that this is exactly what trading's about. You got Tim on one side with the technical side. You got me with the street guy view, kind of feeling things out. You got help coming in from HL Camp, the Quant Report. What we're doing here is we put a lot of really, really talented, good people together, and what we do is we analyze the markets throughout the day, and may the best man win. We'll be back tomorrow with another update.
Oh, can I say one thing here? One more thing here. Just so you know, tomorrow, December becomes the lead month, and then we're going to trade a week from Friday into expiration. And I have a funny feeling that after expiration, Top Notch's move is going to be seen heading south. But big key, all right?
And one last little thing. There's an old adage that is going to fall into play tonight. It's called Sell Rosh Hashanah, buy Yom Kippur. Now that actually is historically, if you look back in Google, you'll find out that it used to be buy Rosh Hashanah, sell Yom Kippur. But you know, we're going to let this play out into the holidays, and we'll be back to you with another update as we go.
And good trading.